Friends, in last few videos, I explained about trend lines, indicators and oscillators, and chart patterns. In this video, I will explain about the candlestick patterns. We have learned that open, high, low, and close prices can be displayed by using bars or candlesticks. Candlesticks are better than bars. In this slide, you can see different candles. Candle is characterized by three main elements. One is the candle body, which is a result of open and close prices. The upper tail is a result of high price, and the lower tail is the result of low price. Various types of candles and their names are indicated on this slide. In candlestick pattern, peculiar type of candles are formed in a particular manner. In general, candlestick patterns indicate the reversal of the present trend. So, there must be rising or falling prior trend for the candlestick pattern to give the result. In other words, the candlestick patterns will give the expected result if there is a strong prior trend and if the stock is in oversold or the overbought condition. I will now explain some powerful candlestick patterns. The first important pattern is engulfing pattern. These are the powerful patterns. There are two engulfing patterns. One is bullish engulfing and the other is the bearish engulfing pattern as shown in the slide. Here you can see the bullish engulfing pattern should take place in oversold condition of the stock. In bullish engulfing pattern, the candles are formed as shown on this slide. After a strong downtrend, a long green candle is formed in front of small red candle. The body of long green candle fully covers the small red candle. This green candle indicates increased buying strength. This pattern gives buying signal. The stock or future is bought if the stock price rises above the close or high of the long green candle. The other indicators also should be observed. The oversold condition of the stock will complement the pattern. Here you can see the bearish engulfing pattern on this slide. Bearish engulfing pattern should take place in overbought condition of the stock. In bearish engulfing pattern, the candles are formed as shown on this slide. After a strong uptrend, a long red candle is formed in front of small green candle. The body of long red candle fully covers the small green candle. This red candle indicates increased selling strength. This pattern gives selling signal. The stock or future can be sold if the stock price falls below the close or low of the long red candle. The other indicators also should be observed. The oversold condition of the stock will complement the pattern. You can see these patterns on this slide also. The next two patterns are exactly opposite of engulfing pattern. These are called as Harami pattern. In bullish and bearish Harami patterns, the candles are formed as shown on this slide. The first pattern is bullish Harami pattern and the other is the bearish Harami pattern. Bullish Harami pattern should form in oversold condition of the stock. In bullish Harami pattern, the candles are formed as shown on this slide. After a strong downtrend, a small green candle is formed in front of long red candle. The body of small green candle is fully inside the body of the long red candle. This green candle indicates increased buying strength. If this green candle is in the upper half part of the long red candle, then the reliability of the pattern is more. This pattern gives buying signal. The stock or future is bought if the stock price rises above the high of the small green candle. The other indicators also should be observed. The oversold condition of the stock will complement the pattern. In this chart, you can observe the rising trend after the formation of the bullish Harami pattern in the oversold condition. Here you can see the bearish Harami pattern should form in overbought condition of the stock. In bearish Harami pattern, the candles are formed as shown on this slide. After a strong uptrend, a small red candle is formed in front of long green candle. The body of small red candle is fully inside the body of long green candle. This red candle indicates increased selling strength. If this red candle is in the lower half part of the long green candle, then the reliability of the pattern is more. This pattern gives selling signal. The stock or future can be sold if the stock price falls below the low of the small red candle. The other indicators also should be observed. The overbought condition of the stock will complement the pattern. In this chart, you can observe the falling trend after the formation of the bearish Harami pattern in the overbought condition. The third pattern is hammer pattern. There are two patterns. One is bullish hammer, which appears at the end of the strong downtrend. The other is the bearish hammer or the hanging man, which appears at the end of the strong uptrend. The hammer must have 2 times or longer tail than the body. On this chart, hammer is formed at the end of the downtrend in the oversold condition of the stock. Appearance of hammer indicates the buying pressure. The buy signal is generated if the price quickly moves above the high of the hammer candle. Other indicators can be checked for stronger signal and appropriate entry. The color of the hammer is not important. It can be green or red. On this chart, bearish hammer or the hanging man is formed at the end of the uptrend trend in the overbought condition of the stock. Appearance of hanging man indicates the selling pressure. The sell signal is generated if the price quickly moves below the low of the hanging man candle. Other indicators can be checked for stronger signal and appropriate entry. The fourth pattern is called as the inverted hammer. Again, there is bullish inverted hammer and bearish inverted hammer or shooting star. In both these patterns, the hammer is inverted. On this slide, you can see the bullish inverted hammer at the end of the downtrend in the oversold condition of the stock. The stock or the future can be bought when the price goes above the high of the inverted hammer. On this slide, you can see the bearish inverted hammer or the shooting star at the end of the uptrend in the overbought condition of the stock. The stock or the future can be sold when the price goes below the low of the inverted hammer. The fifth powerful pattern is the star pattern. The bullish star pattern is called as morning star and bearish star pattern is called as the evening star. The morning star appears in the downtrend and the evening star appears in the uptrend. In this chart, you can see the formation of the morning star pattern. In this pattern, you can observe only the bodies of the candles and ignore the tails. In the morning star, at the end of downtrend, one candle appears gap down and the next candle appears gap up. To observe gap up and gap down, one can ignore the tails and consider only the candle body. The gap up candle must close above the half of the first candle in the formation indicated by number 2. After gap up candle, if the stock price closes above the high of gap up candle, then it generates buy signal. Other indicators should be checked for stronger signal and appropriate entry. In the evening star, at the end of uptrend, one candle appears gap up and the next candle appears gap down. To observe gap up and gap down, one can ignore the tails and consider only the candle body. The gap down candle must close below the half of the first candle in the formation indicated by number 2. After gap down candle, if the stock price closes below of gap down candle, then it generates sell signal. The central candle of the pattern shown with number 4 can be doji also. Other indicators should be checked for stronger signal and appropriate entry. In this slide you can see the chart with the evening star formation at this place. Friends, while trading, one must look for some important things. One is the oversold and the overbought condition of the security for buying and selling, respectively. The other thing is about the fundamental performance, like sales, profit margin, debt, earning per share, book value, dividend history, bonus et cetera, and the good and bad news about company in the sector. Friends, if you think you have got good information from this video, then please like, share and subscribe to this video. Thank you and have a good day.